Hi folks, this is Jamie Upson from Stonehearth Capital Management with your July 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events from last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. In mid-July, Greek and European negotiators were finally able to hammer out a compromise that keeps Greece in the Eurozone while instituting some of the reforms creditors wanted to see. However, the wheels seem to be coming off the deal already, as both sides ultimately want very different things. Greeks want austerity relief and debt restructuring, while creditors want further reforms. Will the deal lead to a final resolution on Greece's issues? We're not so sure. Next, earnings season came into focus in July, and the picture so far is just so-so. Out of the 263 S&P 500 companies that have reported earnings so far, earnings were up just 3.2% year over year on essentially flat revenues. The energy sector is dragging on overall earnings growth because of low oil prices. Taking energy companies out, analysts expect overall S&P earnings to be up 5.3% year over year on 1.2% higher revenues. So again, you can see that the energy sector has been dragging us down. The results tell us that a lot of the weakness companies experienced in the first quarter stayed with them in the second. Will U.S. firms be able to shake off the doldrums in the second half of the year? That is the question, and it's hard to say. With the European and the Chinese economies still struggling with growth, the global demand picture doesn't look too strong. Domestically, the economic picture is actually doing reasonably well. Hiring increased steadily and wage growth is edging upward, but consumer sentiment dropped in July, which is probably associated with the concerns in Greece and China. We also got our first look at second quarter GDP, which showed that the economy grew at 2.3% last quarter. While the economists had predicted higher growth, it's still a vast improvement on the 0.5% the economy grew in the first 3 months of the year. The Federal Reserve met again in July, and though no interest rate changes were announced, the central bank reiterated its intentions to raise rates this year. The Fed cited improvements in the job market in support of its intentions, though future decisions will still be contingent on further job gains. Our expectations baked into stocks and bonds. Boy, I wish we knew, but we don't know for certain. But the Fed has been telegraphing its rates for months, or its expectations for raising rates for months now. So we hope that markets won't overreact when rates finally start to go up. How fast will interest rates go up when the Federal Reserve starts raising interest rates? We're not sure. But everything they've said thus far tells us that they'll move cautiously and keep an eye on the data as they go. How soon will your credit card rates go up, or your variable rate home equity lines of credit? I think it's safe to say these rates will be heading higher, at least within the next couple of quarters. If you are in the market for a new fixed rate mortgage, you may want to reach out to a mortgage lender in the near future to have a discussion with them. Looking ahead, investors will be looking for earnings, surprises, and gauging expectations for the third quarter. The economic picture is pretty mixed right now, so investors will be keeping a close eye on data in the coming weeks. Once again, this is Jamie Upson with Stonehearth Capital Management, signing off for the month of July 2015. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.